Welcome back to the Deep Dive. Today we're going to be looking at Entero Healthcare Solutions. It's a company that's really making a name for itself in India's pharmaceutical distribution space. And we've got some really interesting excerpts here from their Q2FY25 earnings call. This is like a treasure trove of information about how they do business, their strategies for growth, and where they see themselves going in the future.
Yeah, I mean, it's fascinating what Entero is doing. They're not just, kind of riding this wave of a booming market. They're actually out there actively trying to shape it. They've really zeroed in on the inefficiencies in India's healthcare system, particularly the distribution side of things, and they're really strategically positioning themselves to, streamline the whole process.
So they're not just distributors. They're playing a much more sophisticated game.
Absolutely. Yeah, they're really aiming to become this sort of connective tissue between the pharmaceutical brands and then all of the thousands of pharmacies and hospitals across India. You can kind of think of it as a massive network, ensuring that these healthcare products are flowing smoothly and efficiently. That's what they're building.
And this market is really ready for that kind of consolidation, isn't it?
Yeah, absolutely. I mean, India's healthcare product distribution market is huge. We're talking about $33 billion, but it's incredibly fragmented. There's, tons of these small scale regional players, and that just leads to inefficiencies and a higher cost. So Entero saw that opportunity and they're going for it in a big way.
So how are they actually building this network? From what we see in the earnings call, it sounds like they're really going all in on this two-pronged approach.
Yeah, they're pursuing what we call a dual growth strategy. It's a combination of organic expansion with a series of very carefully chosen acquisitions. It's like they're building this vast empire brick by brick, but at the same time, they're conquering strategic outposts to really solidify their dominance.
Okay, let's break that down a little bit. First, the organic growth side. What are they doing to expand their reach and what they offer?
So on the organic side, they're aiming to grow at least twice as fast as the market. And they're doing that by strategically expanding their network, adding more warehouses and building partnerships with hospitals and pharmacies. Right now, they operate 95 warehouses, and they work with over 3,100 hospitals and a mind-boggling 79,500 pharmacy retailers across India. That's a serious footprint.
It's like they're weaving this giant web across the country. But they're not stopping there, are they? They're also looking to diversify the kinds of products they offer.
Yeah, that's right. They're not content with just pharmaceuticals. They're looking at medical devices, surgical consumables, even diagnostic equipment. They want to be a one-stop shop for all healthcare product needs in India.
Talk about ambition. Now let's move on to the conquering outposts part of their strategy. Their acquisition spree has been getting a lot of attention. Can you give us the rundown on what they've been up to?
Sure. So in FY25 alone, they've completed 9 acquisitions. It's really remarkable how quickly they're moving. And these acquisitions have added a significant chunk of revenue. We're talking about 750 crore or about $95 million USD in annualized revenue.
Wow. And they're not just buying up any company they can get their hands on, are they? It seems very strategic.
Yeah, they're definitely being very smart about it. They're focusing on companies that align with their overall goals. For example, they've acquired companies that specialize in diagnostic consumables and medical devices. That strengthens their offerings in those areas. They've also used acquisitions to expand geographically, moving into new territories.
So they're kind of like playing chess carefully, planning their moves to control the entire board.
Yeah.
But tell me, are they focusing on any specific types of acquisitions? Like, are we talking horizontal integration, vertical integration, or something else entirely?
It's a bit of a mix. We see elements of both horizontal and vertical integration in their approach. Horizontal integration, that's where you acquire companies at the same level of the supply chain, like acquiring another pharmaceutical distributor. That lets them consolidate market share and squeeze out the competition. On the other hand, their move into medical devices and diagnostics through acquisitions, that's an example of vertical integration. They're expanding their presence across different stages of the healthcare product supply chain, and that gives them more control and potentially higher profits.
So they're not just expanding their reach, they're aiming to control more of the value chain. That's a bold move. But they're not done yet.
Nope. They've got 2 more acquisitions in the pipeline, and they're on track to hit their goal of 100,000 crore in acquired revenue for the year. They're moving fast and shaking things up. It's a classic disruptor playbook.
But with expansion this rapid, there's got to be a certain level of risk.
Of course. This aggressive growth strategy, especially all these rapid-fire acquisitions, it comes with some inherent risks. Integrating a company, particularly in healthcare, which is so complex, is never a walk in the park.
Okay, let's talk about those risks a little more. What are some of the specific challenges they could run into when trying to integrate these newly acquired companies?
Well, for one thing, you're not just merging balance sheets. You're bringing together different company cultures, different ways of doing things, different systems, maybe even conflicting values. Trying to mesh all of that together seamlessly is a huge challenge.
Right. Merging 9 different company cultures sounds like herding cats. And don't even get me started on the IT side of things.
Exactly. And if these integrations aren't smooth, you can end up with disruptions in the business. You can lose key employees, and you could even damage the brand's reputation. So while acquisitions can be a fast track to growth, they also come with their own set of potential problems.
So it's a balancing act. They need to seize growth opportunities, but they also can't afford to bite off more than they can chew.
Exactly. That's where strong leadership and a clear strategic vision become absolutely crucial. And from the earnings call, it seems like Entero's leadership team is fully aware of these potential risks. They specifically highlighted their focus on smooth integration and making sure they achieve positive operating cash flow. They get it, rapid growth without careful planning can be a recipe for disaster.
So it sounds like they're aware of the tightrope they're walking. They're going for aggressive growth, but they're also trying to keep their eyes on the prize of long-term sustainability. And this is where it gets really interesting. We've got this company aiming for explosive growth while navigating a complex and competitive market. What does their future look like?
Well, despite those potential risks, Entero is projecting some incredibly optimistic numbers. They're forecasting revenue growth of 35% to 40% for fiscal year 2025. And here's the really interesting part. They're aiming to achieve a 4% EBITDA margin by the end of the year.
Okay, hold on a second. Let's take a quick step back for our listeners who might not be fluent in financial jargon. Can you break down what EBITDA is and why this 4% target is so significant?
Sure. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's basically a way to measure a company's core operating profitability. You're stripping away the effects of things like financing and accounting decisions, so it gives you a clearer picture of how efficiently a business is generating profits from its core operations.
So it's a way to see how well the business is really doing regardless of things like debt or tax strategies.
Exactly. And that 4% EBITDA margin target is a big deal. It shows they're confident they can stay profitable even while investing heavily in expansion. It suggests they believe their growth will be substantial and profitable, which is a tough thing to pull off, especially in a fast-changing market like this.
So it's not just growth for the sake of growth. They're aiming for profitable growth. That's an important distinction. But how exactly are they planning to hit these ambitious targets?
Well, they're betting on two main things: the continued success of their organic growth initiatives and the seamless integration of their recent acquisitions. They believe that by expanding their reach and what they offer while successfully merging their acquired companies, they can drive both revenue growth and margin improvement.
It's a bold plan, to say the least. Now, you mentioned they're aiming for positive operating cash flow by next year. Why is that so important?
Positive operating cash flow is really the lifeblood of a company. It's a crucial indicator of financial health and sustainability. It basically means the company is making enough money from its day-to-day operations to cover its expenses. That's vital for any company, but especially for one that's growing as rapidly as Entero.
So it's a sign that their growth is built on a solid foundation, not just smoke and mirrors.
Precisely. They can't keep burning through cash forever. They need to show they can generate cash consistently to fuel their ambitions and, importantly, reassure investors.
So they're playing a high-stakes game. They're making bold moves, aiming for impressive growth, but they're also facing some serious challenges. It's a classic story of ambition, strategy, and risk. But before we move on, I want to bring you, the listener, into the conversation. What are your initial thoughts on Entero's business model and their growth strategy? What stands out to you? We'll be right back in just a moment to continue our deep dive into the exciting world of Entero Healthcare Solutions. Welcome back to the deep dive. We're really digging into Entero Healthcare Solutions here. This company is on a mission to become a real force in India's healthcare distribution landscape. And we've been talking about their dual growth strategy, this interesting mix of organic expansion and some pretty aggressive acquisitions.
Yeah, and what really strikes me about Entero is their ambition. They're not just content with, slow and steady growth. They're aiming for market dominance, and they're willing to take some risks to get there.
But as we said, those risks are definitely real, especially when it comes to acquisitions. It's not as simple as just, adding numbers to a spreadsheet. Integrating companies, especially in healthcare, which is so complicated, is a massive undertaking.
Absolutely. I mean, think about it. Trying to merge different company cultures, you've got established ways of doing things, different systems, and maybe even values that clash. Trying to make all of that work together smoothly is a huge challenge.
Yeah, it's like trying to mix oil and water. And then there's the practical stuff too, merging IT systems, aligning how they do things, making sure quality control is consistent across all these different entities. It sounds like a recipe for major headaches.
Yeah, and those headaches can turn into migraines pretty quickly if they're not careful. When integration goes wrong, you can have disruptions in the supply chain, deliveries get delayed, customers get frustrated, and it can even hurt Enetero's reputation.
So the stakes are high, the potential rewards are huge, but so are the risks. So what else should investors be thinking about when they look at Enetero's strategy?
Well, one really important thing is the price they're paying for these acquisitions. In a hot market, it's easy to get caught up in bidding wars and end up overpaying for assets that might not be worth it in the long run.
It's like getting swept up in the excitement of an auction,
Mm-hmm.
right? You could end up spending way more than you planned just to win. And in this case, the prize could turn out to be more of a burden than a benefit.
Exactly. If Enetero overpays for acquisitions, it could put a strain on their finances and hurt their profitability down the road. Investors really need to look closely at these deals. Don't just focus on the headline numbers. They need to figure out what the real value is.
So it's a balancing act. They have to be bold and decisive to gain market share, but they also have to be careful and disciplined to avoid making mistakes that could cost them. So what are we hearing from Enetero's leadership about these concerns?
Well, from what they said in the earnings call, it's clear they're aware of these potential pitfalls. They stress their commitment to making integrations go smoothly and their focus on achieving positive operating cash flow. Those are good signs.
Yeah, it sounds like they're not just blindly chasing growth. They're thinking about the long-term health of the business.
Right. Sustainable growth is all about finding the right balance between ambition and caution.
Exactly. So for investors who are considering Enetero, what are the key takeaways from what we've discussed so far?
Well, Entero is a company with a bold vision and a clear plan to achieve it. They're in a large and growing market with a lot of potential for consolidation, and they have a strong track record of both organic growth and smart acquisitions.
But they're also operating in a very complex environment with a lot of potential risks. Whether or not they can pull off this ambitious plan depends on their ability to successfully integrate all these acquired companies and stay financially disciplined while they're growing so fast.
Yeah, it's a fascinating story that's unfolding right now. Investors need to weigh the potential rewards against the risks and decide if they think Enetero can deliver.
You know what I think is interesting here? There's a broader lesson here for anyone who wants to understand how businesses grow and change. What's really cool is how companies are using a combination of tried and true strategies and new innovative approaches to navigate a market that's so complex and always changing.
Yeah, it really speaks to that entrepreneurial spirit and the power of strategic thinking. It's a reminder that in today's business world, you can't afford to stand still. Companies have to constantly adapt, come up with new ideas, and expand their horizons to really thrive.
And that, my friends, is what the deep dive is all about. We're not just summarizing information. We're exploring the forces that drive success in the business world and uncovering the insights that help us understand the world around us. We'll be back in a moment to wrap up our deep dive into Enetero and leave you with a thought-provoking question. Welcome back to the deep dive. We've been on quite a journey with Entero Healthcare Solutions, exploring their ambitious plan to really change India's healthcare distribution landscape. We've looked at their business model, their dual growth strategy, their string of acquisitions, and even the potential risks they're facing.
Yeah, it's a fascinating story. A company at the crossroads of ambition, innovation, and risk. Entero is making some bold moves. They're betting big on their ability to consolidate this fragmented market and come out on top.
And that brings us to the final, and maybe the most interesting part of our deep dive. We've talked about where they are now, but what about the future? What factors, besides the ones we've already discussed, could influence the Netero's path? What trends in the Indian healthcare market, or even the global economy, could affect their ability to reach their goals?
That's the big question, isn't it? Healthcare is constantly changing. It's shaped by forces that are predictable and some that come out of nowhere. For Entero, one crucial factor to watch is the regulatory environment. Changes in government policies, especially those related to healthcare and pharmaceuticals, could have a huge impact on their operations.
Right. A shift in regulations could either really help them or create some serious obstacles. It's a
Yeah.
wild card they'll have to handle carefully. What about technology? We're seeing this huge rise in e-commerce and digital health platforms. Could that disrupt Eneto's traditional way of doing things?
It's definitely something to think about. The digital revolution is transforming healthcare in some pretty profound ways. Telemedicine, online pharmacies, direct-to-consumer healthcare models are all gaining traction. Entero has to be nimble and adapt to these changes to stay ahead of the game.
So they can't just sit back and relax. They have to be proactive,
Yeah.
maybe even disrupt things themselves. Just being a distributor in the digital age isn't enough. And what about the global economy? Could things like inflation or supply chain problems affect their bottom line?
Absolutely. Those are factors they'll have to deal with. Inflation could eat into their profits if they can't raise prices for their customers. And supply chain issues, which have become all too common lately, could make it harder for them to deliver products on time and in the quantities they need.
So it's a complex web of interconnected forces that Netter will have to navigate. Their success is far from guaranteed. But that's what makes this story so fascinating. We have this company with audacious goals, a clear plan, and a willingness to take risks. Only time will tell if it pays off.
It reminds us that the business world, especially in a dynamic field like healthcare, is rarely predictable. It's a constant dance of adaptation, innovation, and calculated risk-taking.
And that's what makes these deep dives so valuable. It's not just about understanding one company's story. It's about gaining insights into the larger forces that are shaping the future of healthcare, of business, and ultimately our world.
Exactly. So as you continue to follow Enetero's journey, we encourage you to keep these broader questions in mind, because the answers could have ripple effects, not just for one company, but for the entire healthcare ecosystem.
Well said. And on that note, we come to the end of our deep dive into the world of Entero Healthcare Solutions. We hope you found it informative, thought-provoking, and maybe even a little inspiring.
Remember, the quest for knowledge is a journey, not a destination. Stay curious, keep exploring, and never stop asking questions.
Until next time, stay informed and keep diving deep.